Hey, hello there, and welcome down to professional trading. Now, for those of us that have been taking through all the our previous lectures and some lessons we've been keeping through, we realize that we've been dedicated enough to go through a step-by-step processing, and so I think I'll be creating this video more like let me just say a gift from me to you. Now, I've done videos on spikes and how to catch spikes and scalping and all. But this is an awesome indicator I'll be bringing up to you that's going to be like, I think I'll be rating this within the 90 to 95% certainty and correction. That if you're disciplined and obviously a learner trainer, like I've been talking about. So obviously our support and resistance level is still going to apply to this, but like I said earlier, this is just scalping and how to catch spikes in the boom and crash market. So the boom and crash market, we've done several on volatilities and range break, which was our previous videos, but I'm going to be showing you some on the boom and crash market. So hang on, stick to this channel. Don't forget to subscribe and like, and then let's dive straight into what we have. So yeah, as you can see here on the chart, some of you might be conversant with this, but I doubt most might not be. So this is an indicator that I've tried myself. It's quite helpful, very interesting, and like I said, it's an indicator for the disciplined. All my indicators I always give are those that you will always enjoy them when you are disciplined and or you stick to your rules in trading. So yeah, you shouldn't have any issues with them. So let's dive straight into what we have straight up in this video. Okay, so before I explain the parameters and all we're working with, I'll have to show you our indicators and all that. So first off, we are using the Ichimoku. Now the Ichimoku, this is what you can see here. No moving, no what you call it, moving averages in this one. So on our main indicator window, we have the Ichimoku, which is, I picked the yellow and the blue color, and also we have the same Ichimoku, but Ichimoku of just one, which is the blue color here. These are the Ichimoku on the indicator one, which is here, and the Ichimoku on the main indicator window one are two different settings, obviously. And then we have the RSI. So we have our RSI, which is a small yellow line here, and then yeah, the whole section and all that. So let me show you the parameters before I do the explanation real quick. So yeah, so first off, we have the Ichimoku Kinkoyo, whatever, the Japanese indicator. So forgive my pronunciations and all that. And then we have our relative strength index, and then we also have another Ichimoku here in our indicator window one. So let me show you the first parameters. Now, so for our Ichimoku Inko Hayo, so this is what going to be our settings. Quickly, they take a screenshot of this if needed, and yeah, this should be it. So the first one set to 9:26:52. I decided not to feel it. Yeah, you can feel it if you feel comfortable with that, but I'm not feeling. And then you pick whichever color is suitable for you. Now, due to my explanation, you might not, so as not to get confused, you might decide to pick the same colors, but these colors must be same with your background. So I'm using a black background or a dark background, obviously. So those colors are dark. So if you were to be using a white background, this color should be white and all set to 1 pixels. Alright, so that's about it on the first level. So the second settings we'll be having is the relative strength index, RSI, and this is our settings for it. So you take a screenshot of this if needed, and yeah, that should be about it. And then the levels set to 70, 30, 90, and a 10. So this should be your level parameter settings for the relative strength index. And then take a screenshot of these, and yeah, we're done. Then we set the second Ichimoku. Now let me click on this is the second Ichimoku, this is the setting. So now the difference between the first Ichimoku setting and the second Ichimoku setting is just here. The first had 9:26 and 52, but this is having a 9:52. All these parameters are still the same. So yeah, that's about it on it. So as you can see, that's the settings. The first one, this is our first one, and this is our second Ichimoku. Just slight difference, and that's all. So make sure you set your RSI, and yeah, we're done. So this is what you should be looking at if you had followed the settings correctly. So let's dive straight into this. But I would like to explain on not just boom on crash. Now people have said that I always do explanations on how the boom, using the boom window as a perfect example, but they also prefer if I had done explanations on crash. So I think I also do that in this video. So let's go real quick so I don't waste time. So now the first thing you need to understand is how to scalp the market first before you can think of the spike. So let's try using this points that we can see here for scalping. So you can see obviously there's a very long downtrend in the market, so we're going to use that to take our first lecture here. So okay, cool. So first off, this is what you need to understand. You need to understand that for you to scalp the market, your the blue Ichimoku line, which is on your RSI, will have to be in between 90 and the 70. Now have to be in between the 90 and the 70 parameter. That is this level in between these two lines, obviously. So if it is there, and then you just don't just go into the trade once it's there. So with the scalping line there, then your RSI should also be touching the 70 or inside or above the 70, just like it has done here right now. So okay, if the certain is that way, and then what the next second parameter you should obviously observe is the crossing of the blue and the yellow line, the blue and the yellow Ichimoku line on your main indicator, on your main chart. So if there had been a crossing here, now you don't just go into a trade. Now the final parameter is once it has all met the previous indication I just talked about, the blue and the yellow line being in between 70 and the 90, and then this has taken a downtrend already. You would go into the trade only and when only the blue line has taken a curve showing a downtrend. So if it was to be on a straight line and up, you don't go into a trade until it takes the downtrend. Now once it does that, you can go into the market for a sell. Now once you go into the market for a sell, your exit point should be whenever your RSI, that's this yellow line, not the blue, when the yellow line touches the 30, that's this level here. So once it touches that 30, that's the point you should leave the market. Now for cases of where there's a very long downtrend like this, now you can decide to do a scalping. Obviously scalping is all about taking little by little of profit. You don't have to gain $10 each time you decide to go into the market for a scalp. You can set your limit for $5 and all that. I have done videos on trading limit and stop loss. So for this video, you just have to, once it takes the trend and touches here, you can exit the market. Now let's use this. So you go into the market at this point. If you were lucky to see this earlier, you can go into the market at this point, and then you realize that you stay into the market until this point. Now that's a whole lot of profit, but you still have a long way to go. So you can exit the market, open another trade, and still go into the market again, because at that point the market, this RSI wouldn't have touched it already. But if you zoom out, you see that. Okay, hold on, sorry. At that point, you can now start scalping little by little. So at this point, after it has gotten to your touched your signal here, there's supposed to be a spike, but there isn't, obviously, because the market decided to take more on a downtrend. So you can now start scalping by counting 10 candles. Now let me zoom in a bit. Okay, so if you had stayed in the market, goes into the market at this point and stayed until this point, for you to down stayed into this point, you can decide to start scalping by counting 10 candles. After that point, start counting 10 candles, probably 10, and exit the market. Take another 10 candles, exit the market, take another 10 candles, exit the market, until probably a spike comes in. Or you can just keep doing that until all parameters are now below the 30. Now that's until the blue and the yellow line are now below the 30. So you see, if you can do that, you don't get greedy, you don't lose much. So you just take out easy level. Now for you to be able to get a spike, let me use this example here. You have to allow one spike to happen for you to get a spike. You can't get, like in this section now, you can't get all the spikes that happen. to be truthful and to be on the safe side, I can only bet you and assure you that if you stick to your plan, you can only take out one spike, which is this one. And see, that's a pretty long candle. You only take out that one spike if you were to follow trade. So this is how it goes. First off, for you to get a spike, the blue and the yellow line must be below the 30 and the 10 parameters. So if it is below the 30 and 10 parameters, you wait for a spike. So once this spike happens, which is this one, once the spike happens, obviously it's still here, the spike happens, and the blue line, that's the blue Ichimoku, still remains below the 30, you opt into the market for a buy. So you can see that if you opt into the market for a buy, it's going to take a downtrend, obviously, through all these red lines, and then there is another spike here. Now this spike takes the blue line out of this, takes the blue line out of the red, the 30 sectioning, and then brings it up out of it. So you can try to stay in for another spike, but it's very, very dangerous. In fact, I won't advise it. So after taking that spike and it booms out, you just wait for the market to come and settle at this point, and then you go in for a sell. So you see, it's quite an easy, let's say, easy formula. Let me put it that way. And now, like, I'm always going to stress this. Now back to our support level and resistance level. So you can see that for you to be able to understand the market and master the market at all form, you just need to learn support and resistance. Now at this level, now you can this is a resistance due to the market is below the resistance line and it's resisting here. Now it keeps on going down until it breaks out of the resistance line with a spike here, and then starts the support line here, goes the upward trend, and it keeps trading their way until it breaks down a bit and comes here to give you another support level. And now our market, now you can, with two previous examples I've given, you can understand that this market is on a support level now. Now even though it's going to come down here at some point, a little spike might happen, but it's going to strive to stay on here until it finally decides to go down. So with this point now, due to the at the point of creating this video, before I started, I would have been in the market to enjoy all that's happening on here, because obviously it's going to be a down sell before a spike will come in anytime soon. Since this is a 1 minute candle, obviously. So that's just basically it on this video. So I'm going to show you, let me do this on let me do this with crash. Now obviously we all know that the crash is always an inverted form of the boom 1000. Now this is a crash 1000. You can also do this with the crash 1500 and 500. So since it's an inverted form, let me take my time on here. For you to trade, that's to do the scalping. Now not spikes but scalping, because the crash in the crash market, it goes down and then it steadily goes up, and then what you call spikes in the bull market, it's called the crash here. So the red candles that goes down once and for all. So first off, let me explain this. For you to enjoy this market, just like the bull market, that it has to be above the 70 parameters before you can start scalping. On the crash market, it has to be in between the 10 and the 30 parameters for you to start scalping. So once it's in that point, you can start scalping until your yellow line obviously touches 70. And you can see at this point it almost did but didn't. You can still stay in the market, come down a bit, and then it goes up until it touches that point. And yeah, that's just about it. And so for each spike also, you have to be patient. Now let's do an analysis here. So while the first spike happened, the blue line was still in that parameter of 90 and 70. So you can go in for a spike and then you eat this great spike out here. So you can take this as profit. And I'm pretty sure in the 1 minute candle, this kind of spike should give you nothing less than $5. Nothing less than $5 or above. So yeah, that's about it on it. So yeah, let me know your feedback in the comment section, how you feel about this indicator. Like I said, it's very productive. Just be disciplined, stick to your plan, don't break your own rules, and you should be a very profitable trader. So that's all on this video. Bye for now. Don't forget to subscribe, like, and leave a comment below so that I can just prepare me for whatever video I'll be creating next. So bye for now and see you.